Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 5th of June and our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank. He's coming to us out of Singapore. As always, on the Monday, great to have you on the show, Vishnu.
It's my pleasure to be here, Brian. Thanks for having me on a Monday. It's a great way to start the week.
Now, Vishnu, we've got to start by saying the debt ceiling deal is done and dusted. What's that impact going to be moving forward?
But clearly we saw markets were quite thrilled over the Thursday and Friday sessions in New York. You had S&P 500 rallying by 2.5%, telling us that they were thrilled with the deal being done. So what happens is you avert an inadvertent crisis. We always think they're going to solve it anyway, but at least they didn't trip any of the wires along that muddling path that they were taking. It got resolved. Markets are very happy. But we did see a few things that are moving at the margins. One of it is the initial reaction, interestingly, saw dollar selling off. Not because of the loss of faith in the US, but the other impact, which is whenever markets are on a risk-on mood, buying equities, buying up risk, dollar tends to decline. So that initial instinct, however, was very short-lived. Dollar rebounded back, partly due to confidence in the dollar due to the debt deal, but maybe more importantly is because people look at one step beyond and say, now what? And with the US Treasury coming down to having less than $30 billion in their coffers, the decimated cash balance means that they need to issue a lot of T-bills. By doing so, they mop up a lot of dollar liquidity from the markets. Now, markets anticipating this know that there's going to be very, very stiff competition for US dollar funding. That sends up the cost of the dollar, primarily because demand for the dollar would go up. Now you've got the US Treasury coming in as a hefty or as a competitor for dollar funding of a huge heft. We think they want to maintain an average balance of 500 to 600 billion. With their current spending, it means they need to issue perhaps, realistically upwards of 800 billion in total. Markets are converging around a $1 trillion figure. So if you can, think about it, 1 trillion is perhaps going to be sucked out of the markets. That's going to make a little bit of a creaking sound in other parts, primarily two big parts. One is the banking sector. Smaller and regional banks may be hit a bit harder. So their dollar funding cost is going to go up. If this catches them wrong-footed, that's not going to be a good thing for banking turbulence risks. The other is asset markets. Asset markets love relatively cheap dollar liquidity. In any case, as long as they are awash with liquidity, markets tend to be buoyant. Since we are getting the opposite effect now, where liquidity is being drained rather rapidly, we also need to be mindful that the rallies we've seen in the equity markets last week may not sustain very long. Let me add one more dimension to this, which is not the debt ceiling. It is the US-China tensions. We just had the ShangriLa Dialogue over this weekend in Singapore. To put things diplomatically.
The ShangriLa Dialogue is, for the benefit of the audience, it's a security dialogue.
Absolutely. And the feature was going to be US-China. Of course, Ukraine was also a parallel discussion topic, but US-China featured. And let's just say the environment and the circumstances of US-China remain rather terse. Against this backdrop, we've seen the renminbi not really holding up. It's slipped back. And that means that apart from the dollar liquidity drain-induced dollar strength, you're also going to get the renminbi drag effect on the rest of Asian currencies, which is why we remain quite mindful, despite a fairly ebullient mood today, that Asia currencies may not hold on to any gains, if any, and in fact, there could be downside risks this week.
Now, on a different note, we've got OPEC movement. So OPEC Plus is sticking to its 2023 oil production targets, and Saudi Arabia announced a voluntary cut. Tell us about that. Obviously, that's led to a spike in oil prices. What should we read out of this?
I like that you used the word voluntary. I'm going to throw in another word here. I'm going to say unilateral. And I think it's Saudi making a big remark. So last week, we warned of this. We said, look, even though Russia came out to say, don't worry, we'll keep production, I think that signals a little bit of a divide between where Russia is, where the incentive is for them to pump more, and where Saudi is, where they don't like prices slipping below $75. So we've repeatedly said that whenever prices slide very quickly under $75 for Brent crude, there is a tendency for Saudi to agitate somewhat. And I think, really it was very thinly veiled. You did see that, the energy minister came out and warned speculators. He said, watch out. I don't think you get any more explicit than that. So we were not that we were not that we were particularly insightful on this, but we said, look, that's the elephant in the room. And on Thursday, we made that point. We said, look, even though Russia is the counterbalance and OPEC may not make a change, we expressly said, watch out for Saudi making a unilateral move. I'd be the first to admit that I thought they would measure this move and not make it at 1 million barrels per day in terms of a cut. We thought it would be 500,000 to 600,000 barrels. But clearly, they wanted to make a statement. What does it mean for oil prices? I mean, we've pretty much seen that oil prices did jump back, testing $78, but the traction really isn't there. And I think that conveys the message that, yes, Saudi is a huge risk, there's supply side risk. But for the time being, US-China appears to be a bigger demand side risk. In particular, with China's economic data disappointing as well, there are two layers of uncertainty. One is economic, the other is geopolitical. So I think you will find that the best thing that Saudi can do, try as they may, is to backstop prices unless there is an independent change in the demand outlook. We expect prices will be a bit supported. What it might, however, do, which is what Saudi intends, is for speculators to be a bit more cautious because of the immediate pain that Saudi can inflict by squeezing positions.
Now, finally, Vishnu, we're at the start of the week. What should we be watching out for that could move markets this week? Obviously, RBI decisions are due this week.
Absolutely. But before that, I think what you find is after a rather mixed payroll data from the US last week, where the jobs creation was strong, but unemployment moved higher, wage growth was a bit softer, markets will be perhaps watching out for the ISM services. I mean, let's remember that the US is predominantly services driven. So previously, where manufacturing slowdown didn't worry them, if services slow more than expected, it could worry. It could change the Fed dynamics and expectations that will come through as US interest rate yield movements as well as dollar movements. So we watch out for that. And then we'll come to the two central banks. We think the RBI, the Reserve Bank of India, given that their inflation has fallen tremendously from a year ago, from 7.8% to about 4.7% now, they're perhaps going to take the chance to pause after 250 basis points of cumulative hikes. Does this mean that they can turn around and start cutting? Some parts of the markets believe that, but we are warning against that. We think there are still macro stability risks, which means any underlying buyers must still have a slight hawkish tilt. So they're ready to pause, not to pivot. The RBA may surprise on the hawkish side. I mean, they have sounded somewhat hawkish. A lot of markets think they could pause now. I think it's a very close call, but we are going to nudge this towards the direction of a 25 basis point hike, mainly because inflation remains rather hot, and primarily because I think the RBA now views the economy slightly more resilient due to inward immigration. So we watch for those. Some Aussie dollar swings that can come about due to that. But other than that, it is the usual looking ahead to FOMC next week's story.
Now, Vishnu, as always, thank you very much for your insights. Thanks for coming on the show.
My pleasure. Thanks for having me, Brian.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, at BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out this conversation on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.